Welcome to Java. Thank you kindly for joining me. It's March 3rd, 2025, and it is also Monday. So, not just a new month, but also a new week. Quite a bit of turmoil happening. As always, when I step away for just a moment, it appears the market dropped and presented another buying opportunity. Now, we've got quite a bit going on for today. I did have some delays with some things I've been working on. So I just want to mention that I appreciate all of you for sticking with me through all of this as I continue to work on improving things for this. So, as always, there's quite a bit to go over this morning. So, let's get started with the markets. Now, our favorite risk indicator, the MMRI, is down right now. Greg is working on a beta version right now. We will look at as always, two main elements of it that kind of dictate what the markets are doing forward now. The 10-year yield is 4.263 right now, so well below the 5% that is the kind of the upper level ceiling benchmark for this. And we've got the relative strength of the dollar right now just below 107. So this not quite currency crusher, but there's a few things he's mentioned that are going to affect these. Now, we'll talk about those in a bit, of course, but we've got Bitcoin and cryptocurrencies. All of these jumped. Now, these are the currents here, and I know things look a little differently this morning, and I'll explain why in a moment. But we've had this massive pump come in after the United States president said that a crypto reserve was to include these five coins here. So, not just Bitcoin, but Ethereum, Solana, XRP, as well as Cardano. Now, if you had joined, this was from Friday. I know a lot of you now are wishing that you had purchased at these prices when I mentioned that these were a good deal. So hopefully if you got in on that, but I understand if you didn't because it's very difficult to buy when everyone else is selling and the fear is very strong. So we're still with the fear greed meter, still in extreme fear, although it's up from the 14 level that it was on Friday. So is this cryptocurrency recovery temporary? We'll take a bit of a look into that as far as what is going on. So aside from this, mention that it's going to boost the reserve. There could be some other long-term benefits for Bitcoin. However, there's going to be a lot of volatility still in store for it. Now, the current stock market looks to open green after what happened on Friday. So there was quite a bit of sell-off in the stock markets as well. Not hit as much as cryptocurrencies, but there is quite a bit of room in here. So it looks like they are recovering a bit. European stocks are having a bit of a boost. That's mostly on defense stocks. Coming more on that later. So now why this looks a bit different is because for some reason I got blocked. They said it appeared I was a robot. I hope not. However, I'm hashing this out with them at the moment. So there's other sources for the data. It just looks a little bit differently that I present to you. So with this, Jeremy Grantham on the meltdown coming for the United States stocks and where he's putting now. So there's still the general consensus above all of the top managers of money that stocks need a correction. And that may not necessarily be true. We've got a couple of revaluation talks going on, as well as some other factors. And really, in my mind, a good portion of this, as you all know if you've been here for a while, is a sign of inflation because as prices go up on everything else and continue, stocks also will continue to rise. Now, we've also got the current United States president heading toward tariff barrage on Canada, Mexico, and China. Now, these are all set to start taking place today. So, urging a little hesitancy in the markets as these come into play. This is still the Trump trade reversal. So, as I was saying before, nothing goes in a straight line. Could be a bounce coming in, very headline driven. So caution on the markets. If you're going to go all in, hopefully you've got some hedges somewhere. So with this, let's look a little bit more into the calendar. We're expecting PMI, manufacturing, more manufacturing numbers, and then the Fed GDP now, which I will speak about a little bit more as well, coming in at 1 o'clock, is what that time period is for Eastern Time, United States. So we've got the Atlanta Fed's talking about sometimes volatile gauge of United States growth has taken a sudden turn for the worse. Well, very definitely. But we'll talk about this with the GDP in just a moment. There's more behind this story. This is from the Federal Reserve Bank of Atlanta. They are the ones that track this. Now, shifting over to Europe, European defense stocks surging as the blocs are reiterating their support for Ukraine now. Anyone that was on the news at all or any of the social media saw the blow up that happened between Ukraine's, I guess you could still call him president, even though he's beyond his time, Zelensky as well as President Trump got into a heated argument and he left on not very good terms. So with this, Rheinmetall, I want to mention this group because I've spoken about them before. Now, they are a main defense contractor producing out of Germany. They're subsidized by the United States in several ways. And so this is a way that the United States can kind of boost the bloc, if you will, because Germany is their main producer. If you've missed this before, you're new here. This is a massive way that the United States can kind of get that production growing for. Germany is the engine for Western Europe. So with this, I want to speak about a couple of other things that have happened because of this. Over the weekend, leaders, including the Prime Minister from Italy, Giorgia Meloni, France, they are trying to repair what did happen with Zelensky in Washington. This fallout is very critical for all of their efforts to bolster this defense capabilities. And Trump is now going to be speaking with Putin. So they're very concerned about what this means for them on the outside if the United States makes peace with Russia and Ukraine is on the outside. They've got a tremendous amount of resources still deployed to Ukraine. Now, the UK and France are pushing for what they're calling a coalition of the willing in order to support peacekeeping forces for Kiev. So European officials are saying they hope to present this, what they're calling Europe Plus, to potentially include Canada to the United States president in the coming days. They're hoping this is going to kind of save their bacon, so to speak. And I'm not making jokes about Canadian bacon. That just happened to come out. So this gentleman right here, Treasury Secretary Scott Bessent, is saying that the United States administration is recalibrating the economy. So the growth is led by the private sector, not government spending. And while this is the correct direction to head, I believe, they're saying inflation will come down as the agenda of deregulation and energy expansion and permanent tax cuts take hold. But there will be a lot of pain prior to this if this does indeed prove to be effective. Now, along with this administration, we'd like to bring up another one. This is the United States Commerce Secretary Lutnick. Now, he is pushing to exclude government expenditures from the GDP, the gross domestic product calculation. And another expert is saying, in short, that the stock market would not like that. And that is correct. The stock market would crash if they decide to exclude the government spending from the GDP. I've been saying this for a long time that the GDP numbers are juiced. They are fake because over a third of the GDP numbers are calculating in government spending. So it's not what the United States is actually producing in a method that brings about good trade. So Lutnick is also arguing the same point that the government spending has historically distorted the GDP figures. So I'm very glad to hear some truth finally coming out about this. However, it will not be good for the stock market, does not like truth. So he's saying he wants to separate the two and make it much more transparent. So he made this announcement during appearance, and this has not been factored in yet, but I think it will hit the markets very soon. So caution on this one because that would crush the market. Now I want to shift over to what they're calling the Mar-a-Lago Accord and what it would mean for the US dollar. This is all part of this revaluation that is going on. And in short, it's 100-year bonds being shifted with no dividends on them. In fact, the yield to drop, but they're paying the interest up front, but they're getting lower coupons. So this is something to go into a little more deeply than I can this morning. I've got quite a bit to cover here, so we'll just go on from this at the moment. So we've got the Bank of England Governor Andrew Bailey thinking that a renewed bout of inflation is nothing to worry about. This, I'm glad at least they say former policymakers are less convinced, because how do you feel about, and I know some listeners in here are from or in the UK, having another blast of inflation if prices rise more? I think it's going to crush much more the middle class there. And there is a lot of under the radar, if you will, suffering and job loss going in. They narrowly averted this prior to this. The past quarter was very weak for the UK. So with this, they're talking about the Bank of England may need to pause rate cuts and ex-official warrants. Well, if you pause the rate cuts, that's the easy money going in. So that in itself, if you don't have easy money, that is going to cut the inflation a bit, but this is also more pain. So a lot of market negative, it's very difficult to say negative because it depends on which side you are incoming. So just caution on that. Now from the other side, because what I see is growing unrest between more of wars, higher trade wars between China. China now is the massive threat because they could overtake the reserve currency status from the United States. Now, this would take some time, not something immediate, but we are watching this shift. They've got several factors behind them, so I'd like to back this up as opposed to just making this statement, and I'll leave you with this. Now, we've got China National Nuclear running this. As you see this, it's an experimental device that they have dubbed the artificial sun. It could start commercial operation, the first power generation, they're saying in about 5 years. And that's not very long from now, but the amount of energy it produces is massive. They've also come back to coal in order to shift all of their production to a higher timeline. So, in order to get all of this done in a more rapid fashion, their government is okay with going back to the fossil fuels as needed to push what they can. Now, we've got their president unveiling also a stimulus plan as this trade war heats up. So they are willing and able, because they've got the resources behind it, as well as inexpensive labor already in place to kind of counter what's going on. Now, their economy is massively distorted as well. They have extremely weak real estate and technology sectors on other sides, but their energy and their artificial intelligence could take over that and kind of bolster it. They've got DeepSeek reporting 545% cost to profit ratio. Now, they also came out and said that this is not completely accurate, but even if it's 1/3 of this, it's still massively productive if they continue in this fashion, as opposed to the United States artificial intelligence push that is massively in the negative at the moment. So, along with all of this, there are a lot of other more quiet physical threats going on. The United States has been bolstering Japan. I've been saying this. They militarized tiny Japanese island. The name of the island is Yonaguni in Japan. It's on the western frontier, has a very small population. I believe it's about 1,800 or so. And so they have silently been building infrastructure and also using it as port base, radar. They've got all of the towers and things that they need to continue this operation. So with this, I wish you all a wonderful trading day, great day in general. Good to be back. I've missed you all terribly. And until I see you again, my friends, stay free.